All right, let's talk about Infosys. One of India's absolute tech giants. And right now, it feels like they're at a really interesting crossroads. So today, we're going to break down the key moves that have gotten them here, and, more importantly, what it all means for what's next. Let's dive into the data.
Okay, so here is how we're going to tackle this. First, we'll look at why Infosys is making headlines right now. Then, we'll get into the optimistic side of things, the bull case, which is all about their huge bet on AI. After that, we gotta play devil's advocate, right? So we'll look at the bear case and the potential risks. And finally, we'll pull it all together to figure out the one key factor you really need to be watching. So, first up, why are we even talking about Infosys today? Well, they're hitting new highs. Let's unpack what's really driving this and why now is the perfect time to reevaluate the whole company.
So, what's all the buzz about? Well, it's this. Just a few days ago, Infosys landed a massive $3.5 billion deal. And look, this wasn't just any old deal. It was big enough to send their stock soaring to a 52-week high. To me, that's the market sending a really clear signal, basically saying, hey, we believe Infosys can handle the biggest, most complex projects in the world. That is a huge vote of confidence.
And that massive deal, it leads us right into the core of the positive story here, the bull case for Infosys. We're going to dig deep into their strategic pivot to what they call an AI-first model, because that's the real engine behind all this new momentum.
This timeline really tells the whole story. After that crazy post-pandemic boom in fiscal 22, things got a little rough. You see the great slowdown hit in 23 and 24, but then, fiscal 25, that was the real turning point. They made the AI pivot, and that single strategic shift is what laid the groundwork for the kind of resilience and strength we're seeing right now.
Okay, so the first pillar of this bull case is Infosys Topaz. The best way to think about it is as the company's AI powerhouse. Generative AI is now driving a whopping 12% of their total revenue. And we're not talking about little pilot programs or experiments anymore. Management has made it clear these are full-scale, in-production projects, which means real, steady, recurring income.
Next up, and this is absolutely crucial in the IT services business, is margin resilience. While a lot of competitors were getting squeezed by rising costs, Infosys rolled out something called Project Maximus. Just look at this chart. You can literally see how their cost-saving efforts, those positive bars, directly fought back against the pressure of wage inflation. That's precisely how they've managed to keep their operating margin in that solid 20 to 22% range. It's that kind of discipline that really sets a company apart.
70%. Now, that is a staggering number, right? So let's take a closer look at what it actually represents.
So that 70%, it represents a massive, massive competitive advantage. We're talking about over 300,000 of their employees now being certified in GenAI tools. This isn't just about a weekend training course. This is about creating a talent moat so deep and wide that smaller competitors simply can't get across. This is the kind of firepower that lets them go out and win those huge, complex deals we were just talking about.
So when you boil it down, the bull case really stands on three key pillars. First, a booming AI business that's finally turning into big money from big deals. Second, just solid, proven control over their costs. And third, a serious commitment to shareholders, giving back 85% of their free cash flow. It's a really powerful mix of growth and stability. But of course, no good analysis is complete without a healthy dose of skepticism. So let's pivot to Section 3, the bear case. It's time for a reality check on the headwinds and the risks that you've got to keep an eye on. And this really gets us to the big question from the other side of the argument. Is all this optimism we're seeing in the market, is it fully warranted? Or are there some underlying issues that maybe people are overlooking?
So, what could go wrong? Well, there are four key things to watch here. First, the economy. Some of their key clients in banking and retail are still being pretty cautious with their spending. Second, there's a really interesting risk of what's called AI cannibalization. Basically, could AI automation actually start eating into the billable hours of their traditional business? It's possible. Third, you've always got regulatory hurdles like H-1B visa issues. That's a constant concern. And finally, leadership. You need stability at the top to keep the momentum going.
Okay, that brings us to our final section, where we tie it all together. Section 4. The key deciding factor. Let's synthesize these two opposing views, the bull and the bear, to get to a clear, forward-looking conclusion.
So what's the bottom line here? Well, despite those risks we just talked about, the market seems to have decided that Infosys is a quality compounder. That's just a way of saying it's a reliable company that can consistently grow its value over time. That old fear from 2023 that it was a value trap, a stock that looks cheap but just goes nowhere,
that seems to have pretty much evaporated. With a return on equity over 30%, it's offering this rare blend of stability and real growth potential.
And all of that leaves us with the one key question for the next year or so. This is the central tension you need to watch. Will the undeniable momentum from AI and these new mega deals be strong enough to overpower the very real macro pressures and the chance that clients might tighten their budgets? How that balance plays out, well, that's what's going to define the next chapter for Infosys.